In this increasingly tumultuous world, what is the UK economy to make of? What is it to make of these economic crises that seem to be sweeping the world at an alarming rate? The war in Ukraine, the trade war with China, inflation, interest rates, energy bills, oil prices, exchange rates, gas storage, food shortages, global recessions, just to name but a few. And all of these factors are having some kind of impact on the British economy and people's lives. So let us do our best to break down what is happening and what we can expect for the future. A lot of people get very confused about GDP figures and what they mean. So let me start by showing you the latest GDP figures for the UK. The Office for National Statistics has just published the latest GDP figures for the UK for July and August 2022. The UK economy unexpectedly fell by 0.3% month-on-month in August, worse than all expectations which were forecasting growth. The main reason was a drop in output in the production sector. However, services output increased notably. Year-on-year, the UK economy grew by 4.8% compared to the same period last year. The economy remains 0.5% smaller than before the pandemic started in February 2020. The UK economy has been struggling recently due to high inflation and rising interest rates. These two factors have led to a cost of living crisis in the UK, which has in turn led to a drop in consumer confidence. As consumer confidence has fallen, consumers have cut back on their spending, which has led to a slowdown in economic growth. If consumers continue to cut back on their spending, then the UK economy will continue to slow down. There are already signs that this is happening. For example, retail sales have been falling for several months. Another problem facing the UK economy is the war in Ukraine. The war has led to a sharp increase in the price of energy, and this has pushed up inflation. It has also made it more expensive for businesses to produce goods and services, which has led to a slowdown in economic growth. The war in Ukraine is also having an impact on the supply of goods. For example, there are shortages of certain types of food, and the price of oil has risen sharply. These shortages and rising prices are leading to a slowdown in economic growth. However, the Bank of England still expects the UK economy to grow by 3%. In 2022, this is despite the recent data, which showed a sharp slowdown in economic growth. The Bank of England is more worried about inflation than it is about economic growth. That's why it has raised interest rates so sharply in recent months. So what does all this economic jargon actually mean for ordinary people? Well, it means that things are likely to get tougher in the UK economy. The cost of living crisis is likely to continue, and people's living standards are likely to fall. This is because inflation is likely to remain high, and interest rates are likely to continue rising. The first thing you may have noticed is the sharp rise in the cost of energy. This is because the price of oil has risen sharply in recent months. This has led to higher electricity and gas bills, and this is putting pressure on household budgets. It is likely that energy bills will continue to rise in the months ahead, which will put further pressure on household budgets. The second thing you may have noticed is the sharp rise in the price of food. This is because the price of oil has risen sharply in recent months. This has led to higher costs for farmers and producers, which have been passed on to consumers. It is likely that the price of food will continue to rise in the months ahead, which will put further pressure on household budgets. The third thing you may have noticed is the sharp rise in the price of everyday items. This is because the price of oil has risen sharply in recent months. This has led to higher costs for businesses, which have been passed on to consumers. It is likely that the price of everyday items will continue to rise in the months ahead, which will put further pressure on household budgets. The fourth thing you may have noticed is the sharp rise in the cost of borrowing. This is because interest rates have risen sharply in recent months. This means that it is more expensive to borrow money for things like mortgages and credit cards. It is likely that interest rates will continue to rise in the months ahead, which means that the cost of borrowing will continue to rise. These are just some of the ways in which the UK economy is likely to impact ordinary people. The truth is that the UK economy is in a state of flux at the moment, and it is difficult to predict what is going to happen in the months ahead. Things are likely to change quickly and unexpectedly. People need to be prepared for this, and they need to be able to adapt to change quickly. Many economists are predicting that the UK economy will enter a recession in 2023, A recession is when the economy experiences a significant decline in output, income, and employment. There are a number of reasons why the UK economy may enter a recession in 2023. The first is the global economic slowdown. The UK economy is closely linked to the global economy, and a slowdown in global growth will inevitably have an impact on the UK. The second reason is the war in Ukraine. The war has led to a sharp increase in the price of energy, and this has pushed up inflation. The Bank of England is trying to bring down inflation by raising interest rates. Higher interest rates make it more expensive for businesses to borrow money, and this can lead to a slowdown in economic growth. The third reason is Brexit. Since the UK left the European Union, it has faced a number of challenges, including a shortage of workers and increased bureaucracy. These challenges have made it more difficult for businesses to operate, and this has led to a slowdown in economic growth. There are a number of things that the government could do to try and avoid a recession. The first is to provide support to households and businesses to help them cope with the rising cost of living. The second is to invest in infrastructure and public services. This would create jobs and boost the economy. The third is to improve the UK's productivity. This would make the UK economy more competitive and better able to withstand external shocks. It is impossible to say for sure whether or not the UK economy will enter a recession in 2023. However, the risks are clearly growing, and the government needs to take action to mitigate them. The UK's current account deficit is another issue that could cause problems for the economy. The current account is the difference between the value of a country's exports and imports of goods and services. A deficit means that a country is importing more than it is exporting. The UK's current account deficit is growing, and this is a problem because it means that the UK is becoming more reliant on foreign countries for the goods and services it needs. This could become a problem if there is a global economic slowdown, or if the UK is hit by a financial shock. However, it's not all doom and gloom. The UK economy is strong in some respects. It is still growing, and it is still one of the largest economies in the world. The UK also has a lot of strengths that it can build on. For example, the UK has a highly skilled workforce, a lot of innovation, and a strong financial sector. If the government can invest in infrastructure, education, and training, it can help the UK economy to grow and thrive. One thing is for sure, though, the UK economy is at a critical moment. The next few years will be challenging, but the UK has the potential to come out of it stronger than ever. The pound has been in free fall against the US dollar. On Monday, it hit a record low of $1.0350. It's the lowest value since it was introduced 37 years ago. The pound has been under pressure for some time, but recent weeks have seen the situation deteriorate rapidly. It's lost 20% of its value versus the dollar since January. This is partly due to the economic situation in the UK compared to the US. The Federal Reserve has been raising interest rates faster than the Bank of England. This makes the dollar more attractive to investors and puts downward pressure on the pound. Geopolitical uncertainty is also a factor. Investors see the dollar as a safe haven currency. In times of trouble, they move their money into dollars, which drives up its value. A weaker pound can have both benefits and drawbacks. On the one hand, it can make the UK's exports cheaper and more competitive on the global market. This can help to boost economic growth. On the other hand, a weaker pound means that imports are more expensive. This can lead to inflation, which erodes consumer purchasing power. While the pound's recent performance has been poor, it's important to remember that exchange rates fluctuate all the time. The pound has been through periods of strength and weakness before, and it will no doubt do so again in the future. I hope this video has helped you to understand the current economic crisis. It is a complex and ever-changing situation, but I believe that by understanding it better, we can all play our part in helping the UK economy to recover. Thank you for watching, and I hope you have a great day.